I'm your host, Kevin Bemmel, and we're here every Wednesday morning at 10 a.m. Pacific time to talk about matters related to building and running a business, our professional lives, building wealth, all of the things that give us the resources to live the kind of life that we want to live. So, over the last several weeks, I've talked about a number of issues related to starting a business, creating your entity, dealing with this new BIOR business information report that you need to submit to FinCEN, other things like that. And I invite you to go to our YouTube channel at The Way to Wow Show at youtube.com/at The Way to Wow Show. And you can take a look at some of those past episodes. So today I want to talk about a subject that doesn't seem to get covered very much or talked about very much, and that is maintaining your entity. So once you establish an LLC or a corporation, there are things that you need to do in order to keep in force the kind of protection that these entities give you. So just like as a natural person, we have to get sleep, we have to eat, we have to exercise, right, in order to stay healthy. So we don't need to exercise our corporation, but there are a number of tasks and filings that we have to attend to quarterly, annually, in some cases every other year, in order to make sure that our entity stays viable. So we're going to go through the most likely ones today. This is not an exhaustive list. Depending on the kind of business that you have, there certainly could be others. It really depends. But I want to put this on your radar so that you're thinking about this, especially here toward, it's kind of toward the beginning of the year. You may be thinking about filing your personal tax return, that sort of thing. So there are, a number of issues to consider with respect to your business. So, maintain your business entity. And as is always the case, everything we do here relates to the 3 pillars of attainment. We're dealing today in the finances realm of the pursuits pillar. And if you're wondering what this whole thing is about, again, please go to my YouTube channel. I have a whole show talking about the 3 pillars of attainment, where it comes from, what it's about, And by the way, if I ever mention, a particular video on my YouTube channel and you can't find it, feel free to drop me a note in one of our social media channels or shoot me an email. I'm happy to send you a link to a particular video. And by the way, same goes if you're wondering if I've done a show on a particular topic. Let me know, and if I have, I'll send you the link. And if not, I'd be happy to put together a show on that topic, assuming it's appropriate for what we're doing here. So these are the filings and tasks that we're going to talk about today. And they are periodic information update. You'll see what that is. Updating your registered agent, licensing, corporate minutes, payroll taxes, 1099s and W-2s, federal and state income taxes, and finally insurance. So these are the most likely ones that you'll be dealing with in your business. And again, I want to emphasize this is not a complete list. Your specific business may have other things that you need to deal with. So, okay. So let's start with the first one, which is periodic information update. So I'm going to go to this particular website here, and I thought I'd be able to copy it, but obviously not. Okay. Well, so if you haven't seen my show on creating an entity, so you need to know that entities are created under state law. So each state has its own rules, although there aren't huge differences, but going from state to state, but there are some differences. Okay, and so I'm gonna share my screen and go to a list. Yeah, here it is. Okay, of states. So most states require an annual report or an every other year report if you have an LLC and a corporation. And by the way, that corporation, it could be a C corp, it could be an S corp, it could be a corporation for a nonprofit entity. It typically doesn't matter. Now, if it's a nonprofit, many times the fee for filing the annual report is lower than it would be for a for-profit corporation, but that doesn't negate that an annual report has to be filed. So here at this is a website. It's called Corporate Net. I found this while I was doing some research for the show, and it gives you a list state by state of what you have to file for a C corporation, although I suspect it's probably true of an S corporation as well. So, for example, in California, a statement of information has to be filed every year on the last day of the anniversary month, meaning the anniversary month of when the entity was formed. Okay, now California also requires an annual franchise tax report. Now, notice in Alaska, you need to do a report every 2 years, and it's due by January 2nd. Okay, so it's different for different states. Let's see. Here's Nebraska requires a biannual occupation tax report, whatever the heck that is, and also an annual benefit report. Now, I've never done business in Nebraska, so candidly, I don't know what that is, but it's obviously something you need to do by March 1st, right? So this is a good resource to look to in terms of what you need to do in your state for your entity. And by the way, you notice that Washington, D.C., although it's not a state, but it has its reporting requirements as well. And let's look. Is Guam on this list? Just curious. Nope, they don't have Guam or Puerto Rico. But they probably, if you're in a U.S. territory, it's likely that you have similar requirements. So if you have an LLC, so the requirements are a little bit different. So here in California, you have to do a statement of information, but only every 2 years, not every year like a corporation, but you still have to do an annual franchise tax report. Okay, that's basically your state tax return. Okay, Florida, you have to do an annual report for an LLC. Arkansas, every year by May 1st. And now, interestingly enough, for an LLC, New Mexico, there's no filing requirement, nor for South Carolina, right? Isn't that nice? Those are business-friendly, places to be. So, what is involved in filing a statement of information? Well, it's going to vary from state to state, but typically you'll go to the website for the Secretary of State for that state, and you'll look for the business filing. So let's just do one kind of let's see. Let's do Arkansas. Yep, here we go. Arkansas. Okay. Business services. I think that's where it is. Yeah. Okay. So going to go ahead and share my screen. And here it is. Arkansas Secretary of State. Okay. So this is, this is just, pretty typical. Okay. So for current businesses, here's your annual report. Now this says for partnerships, but here, corporations, LLC, nonprofit online filing system, right? And here you go. Here's a whole list of things that you can file. So a domestic for-profit articles corporation, certificate, change of registered. We're going to talk about that in a minute. But here's all the list of things that you can file online. Now, what's interesting is, and I recall this now because I was helping someone with an Arkansas entity. You won't find a link here for filing the annual report, but you can file the annual report online. So what I recommend is that you do a search for that. Here it is. Search right here. File annual report. Okay, and let's see what we get. Okay, nonprofit annual report. Here we go. Annual report for domestic, foreign, LP, right? And there you go. Okay, so here you get the list. Here's for limited partnership, limited liability partnership. Oops, wait, limited partnership. Oops, that's the wrong one. Let's go back here. Let's see, non-foreign, cooperative, nonprofit for current businesses. Here's where you do your taxes online, partnerships. Corporations. Okay, here you go. And types of corporations, frequently asked questions, Okay, partnership, general limited liability partnership, corporation. Here you go. So this gives you the information on. Oh, this is for how to file it. Okay. No, now I can't. Silly me, I can't find where I filed that. Let's see. Let's try one more place. eNotary, UCC, current businesses. Okay, here's for filing your franchise taxes and annual reports part. Oh, that's so weird. Franchise business entity search. Okay, well, I know you can do it online because I helped someone do it, but I don't want to take more time for this. You may have to hunt around a little bit, unfortunately, but it is important to make sure that you comply with your state's periodic updates. Okay, next, registered agent. So this is your agent for service of process. So any entity, corporation or LLC, has to have either a live person who will accept service of a lawsuit, or there are sort of like corporate agents for service of process that they're basically in a business of accepting service of a lawsuit. Okay. Now, you don't need to update this every year. However, you do need to make sure that whoever your agent for service of process is, if it's a live person, that person is still alive, right? So if the person dies, you're going to have to update the information about your business as soon as possible in order to make sure that there is someone there who can accept service. So when you do your annual filing, okay, maybe you're your own agent for service of process, so you're not going to change that. But if for some reason you're going to have someone else in your company be the agent for service of process, so now you can change that name. Now, if that person were to leave the firm or pass away or something like that, so you can't wait until the next annual or biannual filing in order to replace that person. You need to do it at the time that they leave. Okay, so this is not necessarily periodic per se, but it is something to verify and make sure that the person is there. Okay, next. Your entity's license and designated officer's license. So if you're in a business that requires a license to operate, and that could be, for example, a real estate company. So in most states, in order to operate a real estate company, there has to be a designated officer who's a broker. Okay. And that license needs to be periodically reviewed. So let's take a look at, my home state. Here we go. California Department of Real Estate. Okay, here we are. Okay, so Here's here's the website for the California Department of Real Estate, the DRE. Okay, licensing, and they have everything can be done online here. Okay, so let's look at renewal. Oops, yeah, renewal of designated broker license. Okay. Okay, so broker license renewal application. Here you go. Okay, and there it is. Okay, so if you're renewing your broker's license, you have to. Well, this is for the live person, I believe, right? Yeah, this is for the live. This is for a live person. Okay, so a designated broker officer. Um, there's the license for your company, but then there's that the person who's the designated officer has to be a licensed broker as an individual himself. So that's why I say in both of these. Um, the entity's license and the designated officer's license. So that application I just showed you is for the person himself, okay, and then you're going to have to renew. Here we go, officer renewal application. Okay, so this is the officer renewal application. So if you're operating as a corporation, right, this is where you renew your corporate, basically your corporate license. But this corporate license has a live person behind it. Okay, so I use the example of a real estate broker, but the same is generally true if you're in any kind of securities business. You have a principal who is supervising the business. That person's license has to be periodically renewed. If you are selling life insurance, so most states you have to be licensed to sell life insurance. But also you may have a business. Now here in California, it's legal to grow and dispense cannabis. Okay, so that license also, it's not, they don't grant the license and one time and then it's good forever. No, it has to be periodically renewed. And by the way, states do this because they want to get revenue. I mean, they want to make sure that people are keeping up with continuing education and that sort of thing, but also they want revenue. Okay, so whatever licenses either the entity itself holds or that people working within the entity hold, you need to make sure that they're being renewed. Okay, so some of them have to be renewed every year, sometimes every 2 years. Real estate licenses in California are good for 4 years. So it really just depends. You should keep track of these, and I keep a spreadsheet on all the licenses that relate to my business and when they have to be renewed, how much continuing education is required to renew them. So I keep up with that. Okay, and don't fall behind. And by the way, renewing the licenses may be more than continuing education, submitting a form and paying a fee. You may have to submit certain data about your business. I know that's the case with my professional fiduciary's license. So we're required to report annually to maintain our license, even though the license is renewed only every 2 years. Okay, so make sure you know all of the things you have to do to keep your licenses in good standing. And if you have any questions, call the agency that issued the license, the people there, that they're there to help you do that. Now, some will be more willing to answer questions than others. I've had situations where the person I'm talking to said, well, I can't advise you on that, blah, 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 blah. Which seems kind of strange because they're responsible for compliance. And if that's the case, find someone else in your profession who's more experienced than you are and ask them the question. But in most cases, the people that you talk to are going to help you do whatever you need to do to comply. That's what their job is. And the fact that you're being proactive in seeking to comply just makes their life easier. Okay, so that's licenses. All right, next. Okay, corporate minutes. So if you have, this is specifically for a corporation, which is why it's called corporate minutes. So a corporation to maintain itself needs to have an annual shareholders meeting and an annual directors meeting. Now, you may be the only shareholder and the only director in your corporation, which makes having a meeting really easy because you're just meeting with yourself. It's fine. It's just make sure you document those meetings with minutes. Now, you can have your lawyer do it. These days there are paralegals who can do this. It's pretty simple to keep up with them, but make sure you do it. Now, in the old days, you would have a corporate minute book. It was an actual notebook, and you would, file minutes and other documents in that book. These days, I don't think they do that anymore. You can keep all of these records online, and have a file for your entity, corporate compliance, that sort of thing. But you do want to make sure that you do have minutes, showing that you held your annual meeting and what transpired. Now, there may be no business to transact, and that's fine. So you can just say, annual meeting was held on such and such a date. There was no business to transact. The meeting was adjourned. Okay. Okay. So you did it. And same with the directors meeting. Okay. And it may sound silly. Well, why do I have to document a meeting at which nothing happened? It's part of the maintenance of a corporation. Okay. And, again, these rules vary from state to state. So if you have any questions about them, talk to a lawyer in your state who is familiar with these kind of entity maintenance issues. Okay. And even if you have to pay them a little bit of money, maybe you have to buy an hour of their time, it'll be worth it, because that way you'll know that you've complied and it's nothing you have to worry about. All right, next, payroll taxes. So payroll taxes now the payroll taxes relate to having employees, not independent contractors, but employees. When you have employees, you're obligated to pay payroll taxes on behalf of those and for those employees. Okay, so payroll taxes would include FICA, which is the Federal Insurance Contribution Act, which is basically Social Security. Okay, also Medicare is paid. Medicare taxes are paid quarterly, and those are the two. Oh, and also federal and state withholding for income taxes. Okay, so those are the three things that you need to deal with quarterly. For your payroll taxes, and you need to file Form 941. So you see this link here, and I'll go ahead and bring this up. Here we go. Okay, so share screen. Okay, so this is the Internal Revenue Services website, and this is about employment taxes. Okay, and there's all the resources you need. You can file them electronically, the forms anyway, and you can also pay them online. You just have to have an account to do that. Okay, and if you saw my show on entities, you remember there's employer ID numbers, right? You can get one of those online as well. Okay, and this gives you all the information you basically need for a small business, and for that matter, large businesses, corporations, partnerships, etc., in order to comply. So this is here. Now, you may want to have a bookkeeper or an accountant who's familiar with these things. Take care of it for you. That's certainly fine. Okay. By the way, you can set up to have calendar reminders sent to you by email or text. Okay, so you don't miss a deadline. Okay. And the quarterly dates are right here: April 30th, July 31st, October 31st, and January 31st. Notice that they're a month after the end of each quarter. Okay, so the first quarter is January through March. Payroll taxes are due by April 30th. April through June, July 31st, etc. Okay, so that's what you do here. Now, if you have no payroll, you don't have to worry about this. But if you have payroll, then not only do you need to do quarterly payroll returns, but you're going to have to do an annual return, Form 940, for what's called FUTA, Federal Unemployment Tax Assessment, I think it is. Okay, so whereas these other types of payroll taxes are paid quarterly, federal unemployment taxes are paid annually. Okay, and so and the deadline is, I believe, January 31st for that. So when you're filing payroll taxes for the fourth quarter, at that same time, you need to file your Form 940. So, and in previous businesses that I've had, I've both done them myself, and I've had my accountant do it. A lot of accountants have a bookkeeper on staff, so it's not like you're paying, the full accountant's charges to have this done. They'll have somebody on their staff do it, so it may not be that expensive. By the way, if you have a payroll service, so part of that service should be the filing of all your payroll returns. So if you have, ADP is probably the best known payroll service. So the ADP will go ahead and file your payroll tax returns, and they'll request the funds in order to pay the payroll taxes. Okay, so while in some cases payroll taxes are deducted from your employees' paychecks, as you know, right? If you remember the famous Friends episode, who's this FICA who's getting all my money, right? But when you have employees, your employee pays half of the FICA and half of the Medicare, and you pay the other half. Okay, so and I believe in total it's about 7.65%. So if you've got an employee who's making $5,000 a month, so you're going to be paying $300 and something a month on top of that $5,000 for your share of FICA and Medicare. Okay, so just keep that in mind. All right, so again, payroll taxes and payroll tax returns. All right. Similarly, in terms of people who are working with you, you need to file 1099s and W-2s. Okay. Now this is a once a year filing that needs to be done, a once a year task. Okay. So now this is just the real top line stuff about this. So this is not advice on who may be an independent contractor, who has to be an employee. Those rules are very complex. They vary from state to state, and you really need to look at these rules to determine how it's proper for you to employ someone. Okay, and the reason I say that is going back to payroll taxes. So for many years, the IRS has been very focused on doing payroll tax return audits. And the reason is because in terms of money per audit hour, payroll tax return audits yield a higher dollar per audit hour than auditing income taxes. Okay, because oftentimes what the IRS will do when they do an audit is they'll look at the people who are working at the company, the ones who are 1099s, and they will determine that indeed they're not independent contractors, they are employees, and then they will tag the business for all kinds of back payroll taxes. Okay, so in general, you need to send a 1099 for anyone who did work for you, non-corporate entities that did work for you, that you paid them over $600. Okay, whether it's an individual or a business is irrelevant. Okay, the only exempt entities are corporations. Okay, so if you paid a corporation $1,000, you're fine. Okay. By the way, though, if if your lawyer has a professional corporation and you paid your lawyer $1,000, that corporation is not the type of corporate entity that is exempt. Okay, so you would still have to 1099 your lawyer. Okay, now not only do you need to prepare a 1099 for all non-corporate entities that you paid more than $600 to, but then and you have to send those off, and the deadline is generally speaking January 31st. Then you have to file Form 1096, which is an annual summary and transmittal of what are called U.S. information returns. What's a U.S. information return? That's a 1099. Okay, so this needs to be filed. I believe the deadline is February 15th. Okay, so presumably, once you've got all your 1099s done, it's no big deal. Then you don't need another month to file this annual summary. Okay, but do make sure that you file this. Okay, this is, by the way, how the IRS knows that someone has received this money, and that's why they want you to file the 1096 so that they can cross-reference the tax returns of the people who receive the 1099s and make sure that they reported that income. Now, let me quickly add, if someone did $500 of work for you, okay, you don't have to send them a 1099. However, that does not mean that the $500 is exempt from their income. It's not. It just means you don't have to file an information return on that person. Okay, so if you received $500 in a payment from someone and you didn't get a 1099, you may be tempted to say, well, I'm not going to report that income. Well, okay, I mean, look, it's your decision, but just understand the fact that you didn't get a 1099 does not mean the income doesn't qualify as income for income tax purposes. It does. Okay, it's just that it's harder for the IRS to know that you were paid that money. Okay, so I want to be clear about that. This is just and by the way, there was discussions, I believe it was last year, about lowering this figure. And there was quite a lot of consternation over that because lowering it would in essence catch a lot more people. And was the IRS really going to audit people who were making just a few $100s on a 1099? The reality is most of this stuff is done by computers now, and so I think that's what the IRS had on its mind. Nonetheless, I checked on this a few days ago. It appears that the limit is still over $600, and so that hasn't changed. But that isn't to say it won't change, next year. So, okay, so this is for people who worked as independent contractors. If you have employees, and you've probably gotten a W-2 before, so your W-2s need to be filed or need to be prepared and distributed to your employees. Okay, and then an annual transmittal of wage and tax statements. What is a wage and tax statement? That's a W-2. So a W-3 needs to be filed with a copy of the W-2s. Okay, and that's how the IRS knows what your employees were paid. Okay, you might say, well, didn't I file payroll tax returns? Yes, you did. Okay, but the IRS wants this summary of what the employee got for the year, because it's easier to cross-reference that with their tax return. And of course, your employee is supposed to report everything on the W-2 when they prepare their personal tax return. Okay, and I think the deadlines are the same. I think the W-2s are due by the end of January, and the W-3 is due mid-February, basically. Okay, so these are annual tasks, annual filings that have to be done. It's part of maintaining your entity. Okay, and so kind of make sure that that's taken care of. And again, if you have a payroll tax service, so they're most likely going to issue W-2s and file a W-3 for you. Now, they may not handle 1099s. It depends on what the services that you got. Okay, so generally speaking, I think payroll tax services don't handle 1099s. But so then, either you're going to have to do it, or someone in your organization is going to have to do it. Or, again, you can contact your accountant. Your accountant may have a service where they prepare 1099s for you. Okay. But one way or another, these need to get done. Okay. Next. All right. Federal and state income taxes. So, federal income taxes applies to anyone who has an entity in the United States. Okay, state income taxes, though, only apply in states that have a state income tax. As of 2023, there was no state income tax in Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. So what is that? 1, 2, 3, 4, 5, 6, 7, 8. There's 9 states that don't have a state income tax. Okay, so in those 9 states, you don't have to worry about filing a state income tax return for your entity. Okay, but in the other 41, you do. Okay, now for a corporation, you're probably, and I say probably because there are certain specialty types of corporations where there are variations, but the most common tax return for a corporation is Form 1120. Okay, now that's for C corporations, by the way. If you have an S corporation, notice it's 1120S. Okay, now LLCs, generally speaking, are treated as a corporation or a partnership, which is Form 1065. Okay, now if you have a single member LLC, so that may be treated as an S corp. Okay, so it just kind of depends, and this is beyond the scope of this show, and you're probably not going to prepare your own tax return for your entity. Having said that, this is something you want to discuss with your accountant. Okay, maybe your lawyer too. It depends, but certainly with your accountant or who's ever going to file your return for you. Okay, I don't recommend filing your own tax returns. While there are many things you can do yourself, like filing a statement of information, and potentially even handling your own payroll tax returns if you have very simple payroll. Once things get more complicated, and I'm not aware of any federal and state income tax return that isn't complicated for an entity. I think at this point, you want to have a professional do it. In many cases, it's not that costly, and it's well worth it, because you'll be able to sleep better at night, frankly. Okay, so you can look up information about these on the IRS website and also on your state tax collector's website. So here in California, that's the Franchise Tax Board. And other states have different names. You can look them up and just get some general information. Okay, but when it comes to filing the return, that's something to discuss with your with your accountant. Now, for an entity that has a calendar year as its operating year, so then tax deadlines are essentially the same as they are for personal income taxes. So your taxes are due by April 15th, along with your return. You can get an extension, but the extension is an extension of time to file the return, not to pay the taxes. So if you have taxes due, you need to pay them, but you can get an extension on the deadline to file your return. If you don't pay your taxes by the deadline, so then you'll pay penalties and interest for late payment. Okay. Now, if you're a C corporation with a fiscal year, so your tax return generally will be due 3.5 months after the end of your fiscal year. So if your fiscal year ends March 31st, your tax return is due April, May, June, July 15th. Okay, so if you see how that works. Okay, so again, I don't want to get too much into the weeds on this. This is for you to discuss with your accountant, but obviously you want to have filing your tax return on your list of items in terms of maintaining your entity. Okay, next. Okay, insurance. I think this is the last maintenance tax we're going to talk about here today. So there's lots of different types of insurance, and you want to have your coverages reviewed periodically. Now that doesn't necessarily mean annually, although you may choose to have it reviewed annually. Okay, certainly anytime there's a significant change in your business, you want to talk to your insurance agent. Okay, and while this is not an exhaustive list, but I would highly recommend that you address at least these 4 categories. Okay, so one is property and casualty. That's damage, like if you have equipment, if you have a building, property and casualty insurance is what will cover damage to your property. Okay, liability, it would be a situation where, let's say you have a restaurant and someone slips and falls and hurts themselves in your restaurant. Now you have a potential liability, and that's the kind of coverage you need. Liability coverage for those types of accidents. By the way, if you have employees and they drive their own cars when they're doing activities for your business, okay, their own car insurance may not insure you. In fact, probably does not insure you. Okay, so if your employees are using their own cars in the business, you need to have a type of coverage. It goes by various names, non-owned auto or non-hired auto, something like that. In other words, it's insurance on someone who's driving a vehicle that your entity does not own. Okay, so that way, if they get in an accident, let's say they're going to the bank, okay, and they get into an accident, then and the person who got hit by them finds out that they were taking care of an errand for your business. So that person is likely to sue your company as well, okay, because they were in your employ at the time that your employee hit them, and so they're gonna go after you, especially thinking that you're a business, you got a lot of money, so there's lots of money to get from you. Okay, so make sure when you discuss liability, you talk with your insurance agent about all the areas that might give you exposure. Okay, that's the insurance term. Make sure you cover all of those areas. Okay, D&O insurance, directors and officers insurance. If you have a corporation, you have directors and officers. Now, you may be the only director and officer of your firm, okay? But you may still want directors and officers insurance. That's something discussed with the agent. Certainly, if you have people who are employed by your firm who are not shareholders of the firm, at that point, you probably need D&O coverage. Okay, so D&O coverage is insurance that covers you for the acts of directors and officers, okay, that may result in some kind of loss. Okay, and it's more and more common for companies to have D&O insurance. So it's well worth talking to your insurance agent about it. And then finally, professional liability insurance. So if you are in any kind of profession, law, accounting, real estate, insurance, securities, okay, all of medicine, by the way, all of these typically necessitate having a professional liability policy. Okay, and in real estate, it's whether you're a broker, an appraiser, a property manager. Okay, so in some cases, it's called E&O insurance, errors and omissions insurance. In some cases, it's called malpractice insurance. That's typically what you hear for like doctors and other healthcare professionals. But whatever name it goes by, it is insurance so that if you make a mistake in the providing of your services, okay, and you get sued as a result, professional liability is there to help protect you. Now, a lot of times, well, not a lot of times, I shouldn't say a lot of times. Sometimes, you'll get sued and the lawsuit is complete nonsense, okay? The issue, though, is that you still have to defend yourself. And professional liability coverage typically will pay for the cost of your defense, okay? So if you have to pay $25, $50, $100,000 to defend yourself, that's a big chunk of money. And that's one of the reasons why you want to have professional liability insurance. So even if you win, it can still be very costly to be sued under professional liability. Okay. And here's the thing. Let's say you're a real estate agent. Okay. Let's say you're a real estate broker and you have a corporation under which you do business. Okay. So as we were talking about in the beginning, in terms of maintaining licenses, okay, that corporate entity protects some things, protects you in some circumstances, but it does not protect you in terms of professional liability, because the corporation needs to have a designated officer broker, and that designated officer broker, that natural person, is liable for professional liability. Okay, so even though you have a corporation and that could protect you, let's say you're showing a property and someone slips and falls and hurts themselves while you're showing a property. Okay, that's not a professional liability issue. That's a standard liability issue. So in that case, a corporation may afford you some protection. Okay, but if you get sued because let's say you had a client who decided that you misled them about the amount of money they could get for their property, that's now a question of professional ability, professional liability, and your corporation will not protect you in that situation in most cases. Okay. Now, I should mention, of course, I'm not giving you any legal advice. I'm just telling you generally how insurance works. For your specific situation, you need to talk to your lawyer and your insurance agent and give them the details of your business so they can see that you're properly insured. Having said that, if you are in a profession, professional liability insurance is an important one to look into. And in many cases, if you belong to some sort of professional association, so they will have a preferred provider of professional liability insurance so you can get the coverage less expensively than you might if you just go as an individual and get it from your insurance agent. So do look into that as well. Okay, so those are the various issues for maintaining your entity. And this is, if you have any questions, as always, feel free to drop the question in our social media. You can always send me an email. I'm happy to respond to your questions. If it's of a legal or accounting nature, I'm going to let you know that I'm not a lawyer or an accountant, a CPA, and I'm going to refer you to your own advisor. But if it's a business question, I'm happy to answer that question. If it's something that several people may be interested in the answer, do post it in social media, because that way everybody can benefit from your question. Okay, and these links will all appear in the show notes. And we got just the legal stuff here. And that's it. Okay, so we're going to close this down. All right, so we're not quite at an hour today, but no sense in belaboring the point. So that is our show for today, and this is our last show for this week. So before signing off, I want to thank you for joining me. And if you join me multiple times this week, thank you extra amount. And wishing you a wonderful rest of the day and a great rest of the week. And hopefully we'll see you next week, 10 a.m. Monday for Trust and Estates Weekly, 10 a.m. Pacific Time Tuesday for business lessons from the military, and then 7 days from today at 10 a.m. Wednesday for the next edition of People Making Money. So thanks again for watching, and have a wonderful rest of the day. Signing off. Marie, you are my bell.